regarding what we saw yesterday and sort of snowballed into today. You know, how I handled it, frustration that came with it, the whole 9 yards. And then we'll just go over how sentiment, especially short-term tactical sentiment, we should be looking at it, how it should be used in coordination with, you know, bigger picture stuff like intermediate term sentiment, okay? Because sometimes it can get a little confusing, but when you take a step back and actually put some thought into it, it'll make a lot of sense, all right? But I just wanted to touch on a couple of things. Then we'll just talk about the market in general and what we could expect here, because we got some economic numbers coming out this week. They're going to be abysmal. A lot of people expecting it to be abysmal. Could end up being worse than what's expected. But the difference is we're going in off a rally, you know, even though we had a down day today. So could be handled differently, but we'll talk about that in a little bit. Let's talk about what went on yesterday into today. All right. So here's the scenario yesterday. We spoke about this for a decent amount of time in the room today. As far as sweeper activity, the overall flow yesterday, right? It was absolutely a disaster. Okay. We had a little bit of action right out of the gate yesterday morning. I'm talking about yesterday now. You know, some under the hood names, primarily a name like Billy, B-I-L-I, caught a decent sweep, nothing spectacular. All right. Take two, caught a little bit of action. So yesterday got off to a half decent start where we started to see a little bit of action in names. Okay. But make a long story short, and let me pull up the market so you could see what went on. Okay, let's see. This is going to be today, right? So this is going to be the move yesterday. Where is this? 31st today. All right. So here's the 30th. Okay. So here we are. This is yesterday here. Okay. So early on, some sweeper activity, you know, giving us a heads up there may be some momentum, some positive momentum, played to the long side a little bit. And then I think it was right around here, if I'm not mistaken. I know there was a niner. That might be too early or no. We ran into a niner, okay, signaling maybe buyers get a little bit tired, whatever the case. And then all of a sudden, the sweeper activity went dark. Okay. As far as individual names, you guys know I like to see not only flow in ETFs, I wanted to carry over into individual names because that's confirmation to me, right? Especially in this type of climate, you know, ETFs are going to catch their share of action. If you want a signal out of, you know, from ETF flow, you can't really rely on just one or two orders. You really want to see commitment behind, you know, that particular ETF, SPY, IWM, for you to have some confidence behind a bet you're going to place. All right. In this climate, especially. So in this environment, I like to see, in other words, we're seeing call buying. I want to see it carry over into the individual names. We're seeing put buying aggressively in ETFs. The confirmation would be if it carried over into the names. Yesterday, we didn't see much of anything. All right. And you guys know from the past, right, when I talk about a lack of sweeper activity, right, because sweepers translate into momentum, right? So when we're seeing a lack of sweeper activity and we're seeing blocks come in and hedging type action, we did see some put selling yesterday, so that's bullish. But to me, that still doesn't really do much for the upside momentum aspect of everything. Yesterday was one of the worst flow days I've seen behind a strong rally in a long, long time. All right. In a long, long time. And the market, you know, kind of went quiet late morning, I think it was, into early afternoon, and then just ripped through, you know, the second half of the afternoon into the close. And there literally was hardly any call sweeper activity behind it. Okay. And that's rare. Okay. It can happen. But a lot of times that's not a very promising sign, okay, when markets are rallying, right? The indices are rallying and sweepers aren't getting behind it, because one or two things usually happen, okay? Either if we're in a climate like this where there's shorts, a heavy short position out there, or they're caught offside, the likelihood is we're going to see shorts panic and protect their positions, okay, by sweeping calls, all right? So it doesn't have to be new buying that comes in, but usually it's one of the two, all right, to confirm that there's some upside momentum in the indices. We had none of it yesterday, okay, none of it yesterday. So it was kind of frustrating to me when watching a market rally and strong throughout the afternoon, because when there's no sweeper activity, I'm not going to partake in it, okay? And then we go into this morning, right? And it was almost a replica. Actually, this morning might have been even a little better overall as far as flow was concerned compared to yesterday. That's how bad yesterday was. But just, there was no real action, right? Small sweeper in a name, you know, you see one, you don't see them again, right? No size, no good looking activity, no pace behind the activity. So today, you would have had one pissed off Jesus if we would have done the same thing and ripped throughout the day into the bell, because again, I wouldn't have anything to show for it because I'm not getting involved in it. All right. So that's 2 straight days of pretty poor sweeper activity as a whole, okay, which could be telling in itself. Again, you guys know I'm not a big fan of trying to get a read of the put action. The lack of call buying sticks out to me a lot of times more than the put activity. All right, so that's my first takeaway from it. But then when I take a step back and see where we were as a whole, I am not as aggravated, okay? Especially today, that today was a down day. It helps a lot because we came into the day, you know, besides coming off a rally like we spoke about on the Sunday webinar, after yesterday's strong finish into the bell, we came in with tactical sentiment, short-term sentiment now against us, okay? So again, if you remember the last few webinars, we've been talking about how we had intermediate term sentiment, right? That's the positioning stuff out there, right? It's a little longer time frame. And then the trader stuff, we had that stuff lined up, right? We had the wind at our backs. So now not only can we expect the squeeze, right? And sellers should look tired, right? Remember we had that discussion? We should expect it sooner than later. That's what the short-term tactical sentiment does for us, okay? And that's why they work well together when they line up, obviously. All right, so that was obviously coming out of this pull and where the rally started. And after a couple of straight up days and yesterday's strong finish, this is what we look like. So those of you who are new members, if you're not hearing me talk about it, the way to stay on top of this stuff is pretty simple because it's two, hold on a second, 2 of the sentiment indicators we look at the most. If I can find them now. I put them here so I can access them easy. Okay, all right. So this is the squeezeometer, right? This is the one intraday indicator we look at. So it updates when there's any changes in the reading every half hour, okay? And think of it, you know, I thought of this a couple of weeks ago, how a buddy mentioned to mine how he looks at it. Almost like the daily sentiment index, all right, but intraday. Percentage bulls, think of it that way, okay, if you're new to this. So you get a grasp on it easier. So when you see, you know, 65 on this gauge, on this odometer, right? Think of it as 65% bullish, all right? So more bulls than bears out there positioned on the trade side, all right? And the way we like to use it is when this thing gets up into the 60s, right? That's where we want to be careful on any new entries that we may be considering, okay? But at the same time, we want to keep in mind for short-term trading stuff only, right? Because this thing, you get one little dip off the morning and you're going to get a pull. All right, so when we see, you know, especially mid-60s when we get up there, a lot of us who have used this over the years, right? We like to put the guns back in the holster and wait for either consolidation or a dip, okay? Yesterday, we were up in the 60s for a good part of the afternoon as the market was strong, all right? So here's where we closed today under neutral, 45 off the pull, okay? So that's the intraday indicator, and then we have the primary end of day sentiment indicator we look at, which measures trader sentiment. Again, short term, but end of the day reading. All right. And you can see this is yesterday. We don't have the update for today. All right. So this gets into the red. All right. And you can see it doesn't happen often, right? Doesn't happen too often. It's not like this thing is going in there every other day. In this market, because of the selling, it's been quite the opposite. All right. So what the takeaway, and this is what we were talking about this morning, the takeaway from this is pretty much this simple. Unless you think that unless you have the confidence that we have officially bottomed, okay, and we're going to get just a runaway squeeze without any shakeouts along the way, which sometimes happens, right? The initial stages of a bottom and a rally, okay? Unless you have the utmost confidence in that, you have to be careful, especially those of you who like to play options, over any short-term bets you're looking to put on. Okay, what it's a signal and a reminder of is, okay, listen, you may like so and so, but if you're going to play weeklies, or you may like the market from here, you think there's more upside, but if you're going to play something short dated, wait for a breather, wait for a day of selling, wait, and it's not only the price action, the cheaper price you're getting on those calls, okay? But, a lot of times, a lot of just extra premium gets sucked out when the riffraff is chasing call side. They juice up these calls, they're tripping over each other, they're getting robbed left and right, right? That's what this sentiment stuff is showing us. They're getting sloppy on the call side, all right? So a lot of times you just want to allow things to cool down a little bit. And it happens rather quickly. You don't need a bullish signal, but at least you get this thing out of this caution area back into, let's say, a neutral stance. And then if you're that eager to put on, that short-term bet on the market or a particular name, you're in a lot better shape. All right. So the trick is, though, to keep this stuff fresh in your mind. And what I like to do is, when I see stuff like this, like coming into today, right, I know already, okay, no matter what the flow looks like, at the most, I'm going to be scalping stuff intraday, okay, in and out, where this doesn't have an effect, right? I'm not going to get caught in a pull. I got a stop loss. It's not going to affect me as much, all right? And if, God forbid, I'm ever going to buy something, okay, it's going to be something I'm starting a position on with time, willingly looking to buy weakness if I get it. Okay, so I'm looking forward to weakness so I can add to that position. That's the only time I would be looking to buy into this. And the God's honest truth, no matter what, every time I've bought into this signal, I kid you not, because I don't do it a lot, but every time it's bit me in the ass. And that's good, right? You want it that way. So that's the way you learn your lesson. Right? It's like sticking your hand in the fire. You get burnt, you're probably not going to stick your hand in the fire again. If you do, you're a moron. So that's good when things like that happen. Doesn't always happen that way. It's not that easy. But that's the way I would approach it. Okay, if you're going to go out and you're going to buy Jan calls in a name that really hasn't moved that much, right, has been a laggard, hasn't participated in this rally, and you really like that bet that came in, it's not the worst idea to maybe start a position if the thing, is not overextended. What you got to worry about are the stuff that's been rallying maybe a bit that needs to cool off with sentiment as a whole. But the easy approach is to use it like a lot of you use it, I know on, on private Twitter, Ani and Tree, a lot of times they don't even want to hear it, right? When they've gotten to the point when they see this stuff against them, they don't want to do any buying. It's not about the stuff. They're not worried about what they may miss over the next day or two. They know from watching these things enough, they don't want to do any buying, and they want to allow, sit, be patient, and allow something to set up, for a better risk reward over the short term. All right. So those of you who are tactical traders, short-term traders, especially if we get into like a range, right? These indicators work well in range-bound markets. Before we broke out last year, these things were money, okay? Where these things don't work as efficient is when you get a runaway bull rally like we had last year. What happens is, you'll get a signal here and the market maybe will pause for a day and then boom, gap up the next day, right? All right, but when you get in range-bound markets or corrections, a lot of us swear by these things, And those of you who have been around with me prior to the recent bull market we had, where we were in one huge range for a couple years, basically, you guys know that we were talking at one time. Remember, we were saying how sentiment, a lot of times trumps flow. Not Donald Trump, but you know what I mean, right? Sentiment in range-bound markets is a lot stronger of a signal than flow. And honestly, as much as I love sweeper activity, it's the truth. It's the truth, because you can see the best, the best looking sweeper activity that you saw in the last month, okay? And if it comes into overheated sentiment signals while the market's range bound, okay? If the market pulls over the next couple of days, the odds are that that name is going to come in with it. Now, it may bounce back and end up going higher anyway. You know what I mean? But the odds are you should get a better price, especially when the market's accommodating, when the market's range bound. All right. So as much as yesterday, okay, because here's where we were yesterday. All right. So I could share my frustration with you. All right. So here was yesterday. Wait. Hold on a second. This is not all one shot here. And where was it? Oh, yesterday. Okay. So yesterday we must have been, yesterday was this. Okay. So we came into yesterday. This is what I'm trying to figure out, guys. So we came into yesterday. Okay. Let's say we come into yesterday morning. Here's where we were, right? A lot better of a signal there. A little weakness, and we're right there. Okay. And what happened was the flow sucked, excuse my French. Okay. And the market stormed higher throughout the afternoon. I didn't participate in it. You know what I mean? And boom. So, and that translated into that. All right. But what was different this morning, we came in with a caution signal already. So no matter what, whether the flow is decent or not, and it wasn't, I wasn't looking to put on any positions today anyway, So that's why I'm not as pissed off. Today I'm actually happy. It was a down day as a whole, because we probably, softened this up a little bit. All right. Anybody have any questions on this? And listen, the tricky part with this stuff, all right, some people do well. Like you guys know Tim in the room, he's always following this stuff, to a T. He'll write calls, right? When it's up here, he's looking to write stuff, right? He's not getting the itch to chase and buy. He's looking to write calls, right? And then when things get down here, that's where he's looking for, he follows technicals, obviously, right? And he's looking at his technicals to see what sets up, as a decent bet on the calls, right? On call side. So that's how he plays it, to perfection in a sense, right? He's got a playbook for both scenarios. Okay. Me personally, This signal, okay, is a sit and wait signal for me. And I'm not going to lie to you, that takes patience, especially for us degenerates. Right? It's not easy to be patient. All right, so that's the difficult part, trying to remember, keep in mind, all right, my signals told me before the day started, I got to sit tight here, wait for a little bit of a breather, and then I can look to buy whatever I wanted to buy. And listen, it doesn't mean that you're going to cash that ticket, obviously, on whatever you decide to buy. That thing could be a complete piece of you-know-what and go south anyway, regardless of sentiment. All right, but as a whole, right, the more you get used to using these things sort of like a compass in a sense, the better entries you're going to find, especially if you're playing stuff, high beta stuff that's tied to the overall market. And a lot of stuff, a little less so now, but in these type of markets that we're in now, a lot of things are moving up and down together for the most part, and it helps. All right. The difference between the two, sometimes they don't line up, but the squeezeometer is sometimes a good way to gauge on where this thing may end up. Not all the time, but this trades intraday. All right. So you in real time, right? Every update, you're going to get an idea of, is sentiment getting flushed out? Because it's not all based, it's not price action based, right? It's not price action based all the time. It's, sloppiness, to put it in layman's terms, sloppiness in the options market, in a sense. All right. Anybody have any questions? And I apologize ahead of time if I miss questions. I got to figure out an easier way because it just rummels through them. I can't even keep up here. But anybody have any question? Yeah, exactly. That's the thing. Exactly. It's not, we spoke about this Sunday, right? Sentiment's not always about taking action. A lot of times the best job it does for you, sentiment, is prevent you from taking action. You understand? It allows you to be patient, right? So if you don't have the discipline in a sense, and you want to come out here like I probably would, I'm being honest, come out here like a cowboy and just buy shit every day, right? I like to click the buy button. I'm not going to lie. This at least slaps you upside the head and says, all right, listen, here you're going to chill out a little bit, right? Here you're going to chill out a little bit, relax, let the market settle in, let some things settle in, and, reevaluate. All right. And Lucci, I remember Lucci used to say this a lot too. There's nothing better, like the best case scenario when you're putting on a trade is having the wind at your back, right? So you kind of want to have everything line up, all right? Because that's where the smoothest stuff comes from. If you look now, like a lot of the winners, right, is stuff that started up from where sentiment lit up green, right? The first batch of flow, right? That's always the smoothest ride, always the smoothest ride. Because, you got the market, right, taking you higher. You got, the in general, just the individual names and as a whole pushing higher, right? You have the options flow, you have sentiment, you have the overall market. That's only going to increase the odds of a successful trade, right? Same on the downside. When you're going against the grain, that's where things become really difficult, okay? Again, doesn't mean that when you have the wind at your back, you're not going to have a loser. We all know that's possible, right? And if you don't have the wind at your back, you can't pick a winner. Of course, that doesn't mean that. It just, this game is about odds and probabilities. You guys know that. It increases the odds of that trade working out the way you would like it. What else we got? Who's LaBelle? Who is LaBelle? Where's LaBelle? You guys making fun of my Brooklyn accent or something? I don't know who LaBelle is. Yeah, so this is pretty easy, right, to understand. The green red, right? So red, bearish, green bullish. This, could get confusing sometimes because it's a gauge, but the way I just explained it to you, I don't know. It made sense to me. And I said, well, let me start explaining it this way. It might be easier to understand. Percentage bulls. That's the way you look at it. Okay. So when this thing is in the 30s, all right, logically, okay, you have 34% bulls out there. That's quite a lot of bears. All right. So that's where sentiment is in your favor. Okay. When you get up north of 60, 65% bulls, that's where you want to slow things down. God forbid, you get near a 7 handle, doesn't happen often, but things are really, really hot. Really, really hot. All right. And again, it's a guide. Exactly. It's a guide. All right. So on that note, we come into tomorrow now, right? Fresh day. We got quite a few things to keep an eye out for as far as noise. Okay. And you know what I wanted to talk to you guys about too? Remember we were talking about Sunday, how like the news was awful, right? The news is awful. Everyone, coronavirus all over the yard. The economy, the whole global economy is at a standstill, right? You just can't physically see anything, any positive showing up, right? It's so hard to see any positive showing up, And now, right, now that we've lifted already in the midst of all that negative news, you see what happened yesterday, and that's where sentiment got hot, okay? You see all of a sudden a glimmer of hope, some light at the end of the tunnel. Abbott Labs, new testing, new drugs here and there, right? You see how all of a sudden the sentiment changed, like out of nowhere, same thing, we're nowhere near a vaccine. Abbott's got a new test. Okay, that should help. I don't know if it's going to unfreeze the economy, but you see how all of a sudden, just with the help of price action lifting, sentiment went from suicidal, coronavirus all over, the lockup of global economy, there's no hope. How could you buy anything? I don't care what sentiment looks like, I can't buy anything. To now, all of a sudden, yesterday, you just have to turn on CNBC and, you could hear some positive mumbo jumbo out of their mouth, and it's just, I find it fascinating, right? Because yesterday was the first day I noticed it when they would, right, J&J, with the news out of J&J. And I just find it fascinating that yesterday, off of that, it translated into what we just spoke about, this. So it went from here to here, translated into that, off that, all the, so now, now it's not that we need more negative news, but, you still have a VIX that's up there. Okay, we're still not seeing anything special out of the flow, right? We're seeing some buying, but really, really, really selective. Okay, that can change, but we haven't seen it to this point, right? So, when you see that stuff, you want to wait for better opportunities, especially for things you want to trade, short-term swing trades, which you got to be careful about anyway in this market. You just want to give yourself a little bit of room here. And look to buy weakness. Weakness is where it's at. Weakness right now with intermediate term sentiment at our back, right? With all that positioning sentiment at our back, we still have that in our favor, okay? That's nowhere near gone yet, okay? We got more upside to do for that thing to wash out. But if we do stay like we were talking about on the last few webinars, right? Where we do this up and down choppy type, bing, bing, bing. It's going to be the pulls, and hopefully we see flow, but the pulls where those sweet entries are going to be. That's where the best risk reward entries are going to come from, are those pulls, because you're going to see names. You're going to see a software name, underbelly name that gets hit in a sell-off. Then you got, one or two updates in the market. That thing can get hot. That thing can get hot. So That's what we want to look forward to. That's what we want to look forward to. We're at an interesting spot. A lot of people are, it's kind of, I'm hearing a little half and half right now, whether we're going to test the lows, right? Some people now, like Morgan Stanley, saying the lows are in, we're not even going to test it anymore. So it's going to be that interesting tug of war where they might drive everybody nuts, right? They might look like all right, here comes the retest, snap it back, and it's sort of big, sloppy chop with some volatility there, that sort of thing, for now anyway. Yeah, the thing about blowing through the low, right, I guess we could blow through the lows and then snap back. The only thing about blowing through the lows, because that would definitely be an option, is that I find it's hard to see that happening with intermediate term sentiment so washed out, okay? So in other words, that's what we were discussing on the last webinar, okay? Not short-term stuff. That's trader stuff. I'm talking about positioning stuff, right? You see the CTAs, the hedge funds, mutual funds, retail, all the positions, professionals, they all got out. Everybody who wanted to get out got out here, all of them. All right. So the way, in my opinion, the way for this thing to break lows, you're going to have no buyers like we've been seeing actually, but buyers just run into their corner and hide, and shorts do the damage. Okay. But if that's the case, what usually happens when it's shorts run into price action, you can get a bust of the lows and then you get that big snapback squeeze. So they're usually quicker. But there was a lot of selling in this straight down move. A lot of selling. There's, as of right now, there's not anybody who wanted to get out got out. Now there may be, other reasons to sell, and maybe a month or two from now, there could be, people who want to sell more. But whoever wanted to get out of this market from this pull off the news we're seeing is out. So that's why it's hard to really see an accelerated move lower unless, something big happens, which is, it's possible right now in this market. I told you 2008, it happened. 2008, very similar to this. We had bullish sentiment line up, right? We had a squeeze, didn't go too far, lasted maybe a couple of weeks, and then right through. But, you know what happened in 2008. There was a reason it did that. You had all out liquidation, banks going under, other things going under. You had a lot of things going out of business, right? Credit freezing. So you had the Fed throwing the kitchen sink here. It's a little bit different. Possible, yeah, but different. I don't know. The odds of that are not high. I think if you really truly believe that this market's heading lower net, the more likely scenario to happen, this, doesn't have to be a rally to new highs or test highs, but more of time. So this thing goes on for a bit, You'll see some names under the hood that actually perform better than the overall market. And then what you're going to see, all that bull bear indicator, panic euphoria, all that stuff, all crosses neutral and above. So all that stuff that's lit up bullish all gets washed out, and then usually the market will go south. You know what I mean? Make sense? So they wear out the bear. So in other words, everybody who sold and everybody who's short, they wear them out. Then after a period of time, they had enough. Shorts are like, I'm out of here. The lows are in, right? People who sold, they're like, I got to get back in here. I missed a generational buying opportunity here. All right. So they reel in some bulls, they get rid of some bears, and then it goes south. Now, I showed you guys the chart. We went over that in 2008, if you remember. You can see exactly how it happened. And then the market really took a dump after that. You remember, we went over, not even just 2008, every market. You get some stability, you know, say like here. Well, this is towards the lows here. You know, you get, it's not even, it doesn't look like much, but it lasts a while, you know? It lasts a while. Like, look at this, 2008. Look at this. Chop, chop, little retest, rally, right? So now here, everybody thinking the worst is over in 2008. Okay? Right here, everybody thinking double bottom, test the lows, rally, we're going to new highs. And right here, that's where, okay, sentiment was bearish to out to wazoo into the lows, not here. It was actually bullish there. You understand? Then it has the green light to go south. You understand? See, even this here. All right? Doesn't look like much, but look, 1, 2, so like 2.5 months, you know, of stabilization, stability. And then, whoop. I think, if I'm not mistaken, this is, oh, look, this is it. If I'm not mistaken, this was bull bear indicator lit up as a buy signal. And this is all it led to. And then look what happened here. And the bull bear indicator, for the most part, stood at or near bullish territory throughout all this. It didn't really go anywhere. But then, you know, Armageddon came. So anyway, that's the point I'm trying to make. You know, usually this is what, something like that is what we're in store, that's in store for us here. Okay. And where's the opportunity in these things, right? The opportunity is what we were just talking about. The dips where you get that tactical short-term sentiment on your side, right? Those are where the opportunities are. So in other words, you get a rally, right? And then you're going to pull back. You know, that's where you want to, a rally, you don't want to buy here with, you know, the squeezeometer or short-term sentiment may be hot. You want to wait, you know, even if you're a couple days early, it's okay because you have intermediate term sentiment at your back. We want to buy here, and then, you know, you get a rally. So that's, you want to buy the dips. You want to buy the dips. Yeah, I saw McElliott had a new note out today. He's talking about a squeeze, if I'm not mistaken. He thinks that, I think he was talking about like the cyclical trade again that nobody's involved in. But I got to double check. I just breezed through it. It came out today. And I really didn't read. I couldn't like concentrate on it. I just read through it quickly. But I'm curious. I think he's bullish. Kalanovich is bullish. You know, they're pretty bullish. A lot of people we follow are bullish based off sentiment, you know, based off sentiment. Yeah, exactly. You got to read McElliott like 10 times before, you know what I mean? Before you really can, before it sinks in. July 2008. Yeah, I think it was this here. That's where intermediate term sentiment a little bullish, and then you had this. Look at this disaster, though. I told you this in 2008. I don't remember this. This is a blur. I'm being honest with you. Because it was mayhem. You know, it was mayhem. You know, I don't remember the price action well. I don't remember anything well because I couldn't follow it as closely. Everybody was like running for cover. Firms were going out of business. Nobody knew what the hell was going on. Well, everybody knew what was going on, but yeah, you weren't concerned with it. You know, as much as I love the market, I wasn't too concerned with it at the time. Like I said to you guys, you were more worried about the money than anything else. But you see, you know, even pulls, usually you get these breathers. Now, this is a different animal with the virus and all, but like even stuff like this, say you get a pull, you get at least this type of stabilizations to right before either one more leg, a retest down, or you head higher. Same here, see? Whoop! Stuck there for a bit, right? And then you had a rally here, and then this, look at those shakeouts. So what we want to do, the two things we want to pay attention to, the sweeper activity and intermediate. As long as intermediate term sentiment is bullish, you know, we want to look to buy into or off weakness. And the flow is going to be a good guide on whether, you know, the timing aspect is always. But the flow hasn't been too good, but we didn't have, you know, it wasn't tested into weakness yet. It's off a rally. Maybe these guys don't want to chase this rally, you know? Yeah, so talking about today's trades, we have 3 names to take away out of today's action. All right, that's it, honestly, 3. Then you had some repeat action and some stuff. You had 2 combos, okay, where they sold puts and bought calls. One was BSX, and the other was Capital One Financial, okay? Both names, you know, the BSX had a little bit of a rally and a rally again today. So you might want to let this thing breathe a little bit, right? So you're looking for any sort of breather or pullback there if you're interested. This is, you know, healthcare related name. I mean, this is probably a quality buy down here. It's a good stock. Slowish, you know, slow name. Capital One Financial, you know, none of us are going to get excited about a financial, you know, but it was a decent bet. Where is it? Let's see. Oh, I didn't post it yet. Hold on. And you had this crowd here, which you could get at a discount. This was a nice sweep, crowd. The problem with the crowd, the sweep is a lot better than the spot. You know, that's the problem. But, you know, it's up to you. Everybody has a preference. So here, crowd, you know, you got a 9er. You were up today. The market reversed, took it down with it. But you can see it trades like this, you know. See, this is what crowd does. Normal. Feels worse if you're in it or you're looking at it, but there's nothing different that I see there. You know what I mean? For you to shy away from that bet. It was a good looking sweep. Hold on, let me post the other ones here quick. 1 second. We can look at those combos. I didn't buy any of them today, option or common. I didn't even fool around again because sentiment was against us. So hold on. All right, and this. Yeah, we'll see where we end up. Sentiment, but we're no matter what, you know, no matter what, even though if we don't have a bullish signal out of sentiment, we still could be a little looser. We're not going into a sell signal, so that's always good. Here, I just posted the new ones. I thought I updated it. All right, here we go. Again? Oh. So here is the Capital One Financial. The player sold June 42.5 puts and bought September 20 calls for $1 debit. So he took in 865,000. You know, cost him about 400 grand. That's a nice looking bet there, though. You know, it's a nice looking bet. It does catch, oh, wow, earnings, April 23rd. We're not in April yet. So you're going to have to hold through earnings more than likely, you know? But this is a buying blood name if you like it. You know, there's a buying blood name. I wouldn't play this thing for a trade. I would play it, you know, you're buying blood, you're looking to add to it, that sort of thing. BSX, same thing, decent amount of time. August 26 puts sold, and use those proceeds to buy August 35 calls. And that cost about 400 grand. The stock is at 32.92, so 26 puts. Yeah, very similar. You know, this thing traded a lot more than this too. The BSX traded like 7,000 times, something like that. So either or, you know, financials. I'm sure you guys, like myself, a little dicey on the financials right now. But this BSX, I would keep an eye on it. You know, for breather, I would definitely keep an eye on it. You know, and that's the thing too. Remember we were talking about this? I think I was talking with you, Ed, that a lot of times, you know, in these market conditions, okay, we see, like you see this BSX and COF today, okay, you don't buy them, you ignore them, right? You put them on your screen, whatever the case. A couple of days go by, the market rolls over again, there's some selling. Guess who shows up? The BSX risk reversal dude again. Boom, hits it again. All right? You're like, oh, all right, that's interesting. You know what? This market looks like shit. I'm not going to buy it yet. I'll chill out. All right? Doesn't do anything. Sideways. Market still looks iffy. Coronavirus still all over the yard. Guess who shows up again? You know what I mean? Like, that's usually in this type of, like, this is no joke. This is at the least a full-fledged correction, you know, if not a crash. They build positions in names they like. They don't hit them once and crawl up into the little hole and you never see them again. And I keep using that as an example, PayPal and SE, if you guys remember, out of the December 2018 correction. You know, they continuously come back. You know, you don't even realize it, and then you're forced to realize it. And then you're like, wow, you know, this BSX guy's been back how many times now? You know, that's the type of action that ends up being that really, really special action out of this. Otherwise, everything's just a trade, and you know, you don't need to stick out your neck and buy some blood, you know, roll the dice for just a trade in the Capital One Financial. You know, you could wait till sweepers get aggressive and, you know, you're coming out of, let's say, bearish extreme sentiment, they hit up an NVIDIA or a Zoom or one of those names that move. You know, Momo names for a trade. BSX, Capital One Financial, those are the type of things that, you know, you're looking to buy when nobody wants them because a Sharpie's tipping you off, and you know, you're going to get rewarded, and you can kind of forget about it and be patient because there's time there. Yeah, exactly. The trip. We little by little, we're starting to get names. You know what I mean? We're starting, the list of names, because it's been so selective, is starting to grow a bit. It's just they haven't really come back enough for anything yet. And it may be just a timing thing. You know, they will. One or two things are going to happen. You know, it's either they're going to get aggressive and bomb everything, okay? And we don't mind that because that's when things are going to move like this. You know, that's not being patient. That's where you just want to get your hands on stuff because they're tattooing everything, okay? So you're either going to have that, or you're going to have where they build positions methodically, you know, over the course of time. It's one of the two. It's one of the two. You know, so it's not like we're going to miss the boat somewhere. You know, you can't, we always worry about that. You can't be worried about that. You know, you can't be worried about that. Like, you think about the amount of money on the sidelines. You guys see me post those cash readings that I post on Twitter and all. You know, you got a lot of loot on the sidelines that if they're going to put some money to work, you know, we can't miss it. You know, McDonald's. Right? Somebody liked McDonald's. That's what it looks like when you like something. When these guys like something out of this mess. You know, they leave a dent. They leave a dent. So that's what we have to look forward to. But, you know, we just got to be patient. We got to be patient. Walmart, yeah, Walmart was more of, I think it was shorter term action, right? Shorter term action. You know, so you know, there's trades and, you know, there's stuff, like I said, the one thing I'm doing, aside from being tactical and trading, I want to build a basket of names with time. I want, you know what I mean? For the first time in this poll, I actually want to do that. But, you know, I'm not going to force it and make up my own names or make action in a name sound better than what it actually is. You know, I want them to kind of force me into some stuff. You know, so that's kind of the way you want to do it. Holding it is a whole different thing. You know, we'll worry about that, cross that bridge when we come to it. You know, let us get some names first. But little by little, we'll get in there. Okay, so those are the combo plays. This is the CRWD play. And, you know, CRWD has caught flow prior to this, but nothing, I don't remember this type of size. All right. And this is short dated, right? What was it? April's. Okay. So this is like a large spec bet. All right. I definitely keep an eye on it. If you're interested in the name, the spot sucks. That's the only thing I would add. But some of these names, you see what's going on. Right, Doku. You saw that Doku? They have nice pops if you're looking for a trade. But you don't want to buy CRWD and hold it up to expiration in this mess. You're just looking for the trade. That's it. You know what I mean? You don't want to hold, just because it's $1 million bet, you don't want to say, oh, I'm going to hold this thing, you know, through all the volatility, sit through pullbacks. You don't want to do that. You want to get a trade out of it and, you know, take your profits and run. Where, you know, Capital One Financial or BSX, with that time, you're looking for more than that. Otherwise, it's not worth it. This is another name, again, awful sector, but it's a recession play. TJX. They swept July calls. This made the top bet list, I think, 2 straight days, if I'm not mistaken. But that was at lower levels. You know, so right here, I think, yeah, this thing rallied. I think it was a little bit ago here, right? I think so. So here's TJX. Okay, July action, had a nice squeeze off a Niner, Super Saiyan Blue. And now they hit leaps. And it looked like a little put selling today there too. You know, so it's already breathing a bit, right? Again, different than the crowd. Crowd's up here into an upside Niner. You know, this is off a rally, but breathing nicely here. So not the sexiest name though. You'd rather a crowd look like this, no? You'd rather crowd look like this, and then we'd be singing a different tune. Yeah, you want to buy a retail name in this debacle? That's known to do well when the economy, when shit hits the fan. Take Two. Yeah, Take Two is a name, you know, that you should have on your list as far as names that caught some decent action with time. I own Take Two. I've traded Take Two a couple times now. Yeah, Take Two. I wanted to own Take Two for a while with time. I missed the rally in Take Two way back when, and I never let myself live it down. So I I'm in some of those, and it's a great name to trade off red a lot of times. You know, great name to trade. You see a sweep and you get a pullback and stuff like that. Net, yeah, Net is it's nothing new. Net they've been buying for a while. This is like one of those underbelly software names. It wouldn't surprise me you see this thing at $50, $60 one day. It's just, what do you do with it now? You know what I mean? They've been buying this thing for a while. I think it caught action. Didn't it get action a couple of days ago? I remember it. I didn't play it a couple of days ago, but I remember it. Let's see. Yeah, Gilead. We don't need to talk about Gilead, do we? Gilead, buy some calls, wait a little bit of time, and hold your nose, close your eyes, and that's it. If you're staring at Gilead or you're trying to trade it, it's got the nickname Widowmaker for a reason. That thing is impossible. Me either. That's what I said. I said, no thanks. It caught all that action, all that heat. Remember, when was it? Last month? It wasn't even a thought in my mind to play that thing. I'm not buying that thing. That thing has tortured people for ages, Gilead. Maybe this time they get lucky. They got the corona drug. Who knows? But they can do it without me. I don't care. It's not going to bother me. Let's see. 7 hours ago. So this was, oh, here. See? This was a block, opening block, April 22 and a halves. This was yesterday. So it did catch some action yesterday. That's what I probably remember. Oh, the word net pops up and everything here. That's why. Yeah, so I had some action yesterday. The point I was making, this is not new action. They bought net over here. 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 The only thing the way I would play it from here is if you want to tuck some away and, you know, you're betting on, you know, becoming real, sort of like what RNG and ZS when they first caught action, you know, that sort of thing. I could definitely see that happening. I don't know anything about the company. All I know, it's under the, you know, an post-IPO, under the radar software name. And if you bought any of those names when they first started catching flow and just tucked them away a bit, you'd be sitting on gravy. Yeah, it's cloud. You know, it's cloud. So, yeah, I bought some stock in that INOV. I was considering options. You know, they're not too liquid, but May, I mean, you got some time there, May. I would like even something further out. I might just buy something further out for shits and giggles. But this looks interesting. This looks interesting. But as of now, I have some stock because it would bother me if it actually did something without me involved, unlike Gilead. You know, so I like this under the radar play. You know, under the radar play. So not, you know, not size action by no means, you know, unusual sweeper activity. If they come in and they hit this thing again, that would be ideal for those of you who want confirmation that this thing is in play. You know, that would be ideal. So if you're waiting on that. But, you know, you had a nice pull, Niner, Super Saiyan Blue, the whole 9 yards. Looks good. Oh, who's that? Lotto? Lotto, are you Tim LaBelle? I see a million Tim LaBelles. Is everybody Tim LaBelle in here? What the fuck is going on here? Everybody's Tim LaBelle. Who's Tim LaBelle? No, I'm saying all you guys who are answering right now are Tim LaBelle. All of you. I don't know who's who. You're all Tim LaBelle. Yeah, I don't know. So I apologize if I don't recognize you. Don't take it personal. It's showing that all of you are Tim LaBelle. Yeah, Lotto, I know it's probably you just by asking for the name. Ew, I don't know what to make of this. I know, like, HYG, let me tell you something. I remember in like 2015, 2016, we saw enough HYG puts to kill a small village. I kid you not. Okay, betting on the demise. Oh, it's Yosti. Okay, I think I got to take a screenshot. Everybody's Tim LaBelle. It's actually driving me nuts right now. It's like a bad dream. But anyway, 2015, 2016, there was so much put action. Okay, and this thing really started to sell off. I thought it was dead, kaput. But it survived it. It survived it. So this thing has the tendency to survive. So I know its size. I'm not saying that the weakness can't show up in it again. It very well may be with this oil thing. This oil thing's nuts, right? With the energy market and everything else. But we've seen that put action before, and it got lit up in flames. So that's the only thing I have to share with you, because it's not new. I've seen it in HYG. We've seen crazy put action. Yes, it is a great indicator, for risk on in this market, in this type of market. A great indicator. How's that LQD been doing? Look at this. I mean, this is where the Fed's at now. You can't really fool around with these things on the downside. It was red today. Wow, finally had a red day. Yeah, this LQD, the Fed's in there. Now it's a rigged game, A lot of people aren't realizing, like, the Fed's not even done yet. The Fed's got to rig the game here. Otherwise, this market's dead. This economy's dead. Let's be honest here. Let's talk real, okay? The Fed and the government's got to step in here and rig the game. Otherwise, you're not going to have much left on the other side of the fence. It's impossible. You're going to have people not paying mortgage, people not paying rent, it's impossible. So you have the Fed already has come in and has fired cannons all over the place. And in my opinion, they didn't even start yet. Did you hear Steve Leisman today? He thinks minimum, the word going around now, minimum, that the balance sheet's going to be 10 trillion at least when it's all said and done. So double what it is now. 10 trillion. Yeah, I was just going to say that. Some people are saying that's not even enough. That's not even enough. But we'll see. But the difference between now and 2008, I'm telling you from experience, 2008, Ben Bernanke, and not really his fault, but he kind of got caught off guard. It was something different, something new. They had to create shit on the fly. He was late to react. This guy, Powell, I give him credit for that. Whether you like what the Fed are doing or not, he reacted, boom, quicker than anybody even thought. Right. I got some experience in crisis management. You're right. But no, all kidding aside, like, when you see the Fed do what it did, okay, in my opinion, it's not a coincidence that things have stabilized a bit. Yeah, they can print money. It's not like any of the other countries out there. What the price is longer term or in the long run is a whole different story. But they had no choice. This whole economy, not to get all macro with you guys, it's not built for things shutting down completely over a course of a period of time. Everything, nothing can function. If you have, these businesses have no revenue. Like, here's something crazy, right? Because I was curious, I found out. In like the Great Recession, 2008, okay, or even 1929, the Great Depression and stuff like that. Like the Great Recession in 2008, do you know what, the economy was down? It was 30%, 20% off full throttle, 100%. You know, right now we're zero. In other words, there's no revenue coming in anywhere. You know, it's like saying, all right, you know what? I got to stick it out a couple months. You know, my business is going to be down 30% for the next couple of months, right? I mean, you survive that. You find a way to survive that. What do you know many businesses that could say, all right, for the next 3 months, I'm not going to bring in a penny? I'm literally not going to bring in a penny for the next 3 months. You know, how does that business pay their bills? There's tentacles that go to in so many different directions. They have no choice. They have more choice. Right, the rent. You got California. The governor said today, 1.5 million filed for unemployment. New York, over 1 million, where it's usually 50,000. So they got to rig the game for a couple months. They have no choice. Yeah, and listen, if you're going to tell me it's going to bite this market and economy in the ass over the long run, right? At a later date, I'm not going to argue with you, you know. But right now, they're going to rig the game. They're going to rig the game. No, forget that. I found that hard to believe from the get-go. You know, that V-shaped recovery and pent-up demand. Like, what do they think? It's a switch, right? It's a lot easier to shut down, lock down, and then to start right up. And what? Everyone's just going to go out and do everything they were doing again? Yeah, it's all service-based. You know, it's all service-based. That's why we can't, you know, on this note, I'm glad we're having this conversation, because we can't get involved in this as degenerates, right? Placing bets. We can't get involved in the details we're talking. Like, I enjoy talking about it. For some reason, I like talking about this stuff. But as far as trying to make money in the market, you're spinning your wheels, okay? Spinning your wheels if you're going to try to focus on that stuff and trade emotionally off of it. You know? Yeah, it's exactly. The stock market's not the economy. And right, like I'm telling you right now, they're going to rig both. You know? If they didn't, right, then obviously, you know, things look pretty shitty. This market, and this market's brilliant too, because this market didn't give any room for error, right? It knew what was going on, right? It knew that there was going to be a global lockdown. It knew exactly what the hell was going to go on, and it went from A to Z without stopping off for a cup of coffee anywhere. It did what it wanted to do, all in that flush. It wanted to get there. You know, so that's why, you know, a lot of people are thinking that you may get, you know, a decent amount of time spent around this area here until we see, you know, what the virus looks like, right? What does June look like? Do people start coming out of their house again? You know what I mean? And then at that time, you know, the market can at least front run that. But right now, even the market doesn't know. How's the market going to figure that out? We don't know what the hell is going to go on. New York is nuts. You know, the numbers are nuts here. But we're closer to the end than the beginning. No, people aren't coming out. People are nailed down in shelter here. People are in bunkers. You had for a couple of weeks now, everybody, you know, all the people who had houses out here in the Hamptons and stuff like that, they all got out of there. Long gone. No, yeah, I'm out east. But now those city slickers, they're bringing all the crap here now, you know? So you can't even, there's nowhere to hide. But yeah, they started that process. They've been coming out here for almost like 2 weeks now. The city's infested. So, that New York is closer to the end. And now you're going to have like, Florida, you have New Orleans getting lit up. All those areas, they're on a 2-week leg, they're going to light up. But we'll see. A lot of people have been hiding in their house, so maybe the damage is not as bad, from this point on. But again, that doesn't tell us anything about the economy and getting back to work and people paying their bills. That's my brain hurts to even think about that. Think about like the player's not paying his rent, right? Where that may translate into not paying a commercial mortgage, right? Which can affect the whole commercial mortgage market, right? Credit. That's where you got REITs, some of them getting destroyed. You heard, what's his name? Trump's boy come on air and talk about the commercial mortgage market is on the precipice of disaster. I don't think people have an understanding of how much rigging the Fed has to do here. They got to basically bail out everything. Everything. They got to take control of everything for a couple months and hopefully put it back in place. It's weird, but look, we're in crazy times. We're in crazy times. So again, we could talk about the macro. We enjoy talking about it. It's fun to follow. It's a good experience, especially playing in these times. But as far as trying to make money off of this, you really don't want it to get in your way. You really don't want to get in your way, because what we're talking about, all the stuff we're talking about, the market already knows, has digested, and has pooped in a toilet bowl already. The market knew all this. Everything all of us are talking about now, that's why the market did this. Okay? That's why the market did this. Well, we were wondering how bad this virus thing, some people were calling it the flu. People were still on the beach, rubbing oil on each other. You know what I mean? While everybody was wondering if this was serious or not, the market knew and got to where she wanted to get to and take care of business. So now, the market focused on the next stage here. And that's why I believe, right, if this market starts to factor in something positive, we're going to see it stand out of the flow. We're going to see it. The noise and the news may be all horrible around us, but we're going to see some legitimate buying into that negativity. You guys remember, again, they were buying the semis. It's hard to pay attention to it with all the noise, but they were buying the semis January into the worst quarter they could possibly go into. Off the trade war and Huawei news, who in their right mind would have bought semis into that quarter? That was the worst quarter you could possibly look at semis. And by the way, all their numbers shit the bed. They were horrible, their numbers. But the market didn't care. That all was factored in. So that's what I mean. Like, even when we saw the FXI and ASHR buying, right? Into the heat, into the heart of the trade war news. Like, that's what usually happens. And now it's even, it stands out more now. It's going to be more obvious to us who follow this on a day-to-day basis now, because you see what the flow looks like now. Right? It's obvious there's nothing going on. All right, but when they step in, as long as you're paying attention, you're not going to miss it. The only thing that's going to get in your way is your bias, or how you feel emotionally about the whole situation. And you just not making yourself not believe. So we'll see. And they don't, who did I speak? I think it was Paul or Ed, one of you guys, we were talking earlier. They don't have to nail the lows. They don't have to come in here. Okay, I remember here, I'll show you right now. I'm just giving you past examples of, it doesn't always happen a certain way here. Okay, right here. Okay, and this is nothing like what we're going through now, but I'm giving you an example. Okay, see this? That was the panic attack, volatility attack off euphoria, right? And I remember this rally, okay? This whole rally, which was quite a big rally, okay? The flow was awful. The sweeper activity into this rally was awful. Okay, we had some squeeze sweepers from time to time. We had some stuff to play, but as far as that, the flow standing out and telling us, wow, they're really, they're getting behind stuff here, didn't exist. You know where they showed up? Here. That's where we saw missiles come in. I remember the first round of action into weakness on a Friday, it started with micron missiles. So this was the dip they came into. Sometimes there was I think it was 2000, it might have been 2011. They came in off the first pause. The market stabilized, bounced, then pulled back a little bit. It wasn't as big as around, sort of like this, right here. And they came in over here, sort of like that. So it doesn't, just because they didn't show up yet, it doesn't mean they're never going to show up. We just don't know. And like the Sharpies we follow, right? You see how they're reluctant to get into? We got to pay attention to that, right? This weekend we get another update. We'll see how this market, looks at the end of the week. If there's some weakness, maybe they get in, but they haven't got in yet. Oh, I got to show you one more thing, and we're going to wrap it up here, okay? Let me show you one more thing. You guys, some of you have seen it, but hold on. This is worth it for those of you who haven't. Where am I? It's on one of my 5 phones. Hold on. All right, here it is. Okay. This tells the whole entire story right here. Okay, we don't even have to look at flow. This told us the whole story. All right. This is buy-sell ratio. Okay. And every bottom, mini corrections, pullbacks, whatever the case may be, okay, this is what we usually see. Okay. Buyers and shorts get squeezed. Okay. The red line is sellers and the green line is buyers, right? So the green line going up means they're buying, right? The more aggressive they're buying, the quicker and higher it'll go. All right. And the red line, when it's going up, they're shorting. When it comes down, they're getting squeezed. Okay. Look at this. That was the shorting or selling in general. Here's the buying. Do you see this buy line right here? Look at this. So in other words, the selling has dried up, right? Shorts are getting squeezed and the sellers have calmed down a good amount, but buyers are still, they need CPR. Look at this. So this is just the average of the two together, one indicator. Okay? So look. Dead. Right? This was in August, okay? So it wasn't even that big of a correction, just a pullback. Oh, it doesn't show December 2018. You had to see that one. That one is when they were tattooing everything, the flow, and the buy line went up here like that. You know, skyrocket. You can't see it. It cut it off there. Okay, that's what it looked like, the buy line. So, no, I don't. This is selling in general. So whether it's shorts or just sellers, period. You know, sellers are shorts in the sense. You know, but the safe takeaway from that is the selling has subsided. Right? So you had heavy selling, and now obviously the selling has calmed down a lot. Right? A lot of times, you know, this moves like this or shorts covering, not shorting. All right, but the buy line, you know, usually you get a nice bump. You get some sort of move, you know, some sort of reaction. Look at this. And this even shows it better. All right, so, you know, that's what we're seeing. And, you know, is it a negative or a positive? You know, we were talking about this earlier, right? It is daily, yeah. It updates daily. It can be looked at both ways, right? If you're a glass half full guy like myself, you could, you know, you could say, oh, well, this market has stabilized and has bottomed, but the buyers didn't even show up yet. Right? They didn't even show up yet. Or you're the glass half empty type of person. You know, you could say, oh, this is just, you know, sellers chilling out and some short covering, but no real buying coming in. And you might need further weakness for them to show up. So, you know, there's no real bullish or bearish takeaway from it, but it just, you know, we're seeing it in the flow, right? I'm complaining about the flow the last couple of days. You know, here, just in general, this is what's going on. You know, in general. And, you know, the only reason I look at this is it lines up with sweeper activity a lot. When sweeper activity gets super aggressive, that's when you really start to see this react, this, you know, this line, this indicator. Like I said, coming out of the December 2018 correction, a legitimate correction, when we started to see sweepers tattoo everything. Remember, the one thing I remember from that flow saying, using the adjective broad so many times, because the buying was so, they bought everything. You know what I mean? Everything. There were too many stocks to pick from. They bought everything coming out of that correction. And you had to see this indicator was up, whoop. No, I mean, you can look at it too in a contrarian way, right? When this gets up to a high level, you know, the buying obviously is going to teeter out a little bit. You know, but I don't use it in any of those ways. You know, a lot of times I like to look at it because it syncs up with sweeper activity. You know, that's why. So I'm saying sweeper activity has been extremely selective, right? Like yesterday we had a nice rally and there weren't even squeeze sweepers, for crying out loud. There was no pace. I talk about pace all the time, you know? There was a spy sweep here and there sporadically, you know, and you know, this is showing the same thing. No, again, I'm not thinking anything from this, but what I'm saying is if it's not obvious already out of the flow that they're buying, we're going to, you know, you're going to see this thing react too. This is just showing, confirming to us what we're already seeing in real time. You know, extremely selective buying. That's the best way I would put it. Because right there buying some stuff. right? They're buying some stuff. We're talking about a couple of names they have bought, but you know, they're not getting excited. They're not getting aggressive. And that's what, you know, everything we talk about here, that's what we're all about. You know, aggressive activity is what creates momentum. You know, and that's what we want to focus on, right? Anyone can buy something, but when they're really, really excited, when they're really, really confident, they buy it aggressively. So that's, you know, that's the pile you want to choose from. You know, that's the pile you want to choose from. So, but yeah, this is, you know, it's pretty interesting anyway. All right, so again, we know what to look for. We know what we're eyeing here. We know, right? We can look at names that they hit selectively and maybe start to piece into them with some time behind it, willing to buy and add to them. If they don't do anything, we can't complain that a stock is not moving over the course of a week if we're buying December or Jan calls and, you know, the flow overall is not there. That's what we want. All right, you want to be a little early so you can build a position or a few positions. All right, so we know that's the game plan. And as far as trading is concerned, maybe you don't want to be bothered with that. I'm sure there's quite a few of you who don't want to build and tuck names away, right, for a variety of reasons. Account size, patience, that's not your goal, that's not your trading style. So if you're trading actively and you're, you know, looking to take advantage of the volatility and the swings and all that, my best recommendation, my best advice to you would be to use the stuff we looked at, the sentiment stuff, as a compass. You know, as a compass. You know, if you're looking for swing trades, I would definitely focus on this. All right, we'll see where that ends up at the end of the when it updates today. All right, and you get close to the green zone or you have sentiment on your side, you're looking for entries. You know, maybe you're just playing the overall market. And, right, the overall market, if you're just playing ES or SPX calls, you know, I know a lot of people who play this game who in this climate, what they do is they tactically trade ES and SPY, and that's it. You know, they don't want to be bothered with names because of the correlation out there. Everything's moving up and down with the market. Who wants to be bothered with a name? So they're just looking to play, you know, the S&P 500 or whatever the case. So that's where that short-term sentiment can play a big part, you know, as far as helping you out with the timing and entries. It's not a crystal ball, okay, but it's going to get you in the neighborhood of better entries and get you out of the neighborhood of poor entries. And that itself makes you a better player in this game. I'm seeing some Niner questions. Niners, again, the way I use them are just exhaustion signals. That's the way I use them. Okay? And for me, primarily, for the most part, I'm using them intraday. Even though, you know, I don't trade off of them as far as swing trades are concerned, but like somebody mentioned, I'm not going to buy into a lot of times a red Niner. I may wait, right? I'll get a little more excited if there's some decent action off a downside Niner. So that's the way I, for the most part, use it. You know, but we went over it on the Sunday webinar. You can watch the replay somewhere around how we use it. You know, how we use it. During market hours, we're looking for Niner lows, some flow there for a squeeze. And look at today. Like, look, here's the Niner high today and talking about like range-bound markets, right? We know Niner highs, they don't always play out like this. But look at this, okay? So I'm not even talking about shorting because I don't even short, right? But let's just say you were looking to get long, okay? And you happen to be in the steam room, you have my screen up and you see, oh shit, there's a Niner here. I'm not chasing this rally now. I can't buy. I can't get long here, right? That little thing just saved your ass on a rollover. All right? You didn't short. You didn't actually place a bet of any sort. It just, it kept you away from something where, again, the odds go down dramatically when you're chasing a move. The odds go down dramatically that you're going to make money on that long. There are occasions you would, but you stick, like I said, into those neighborhoods. It really is. You know what I found fascinating? It's not even about Niners working. Okay, just the flow. Like a lot of times we'll run into an upside Niner, and all of a sudden the flow drops dead. I kid you not. Like you guys think I make it up. The flow just drops dead. Like you get sweeper, 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 and then you get a Niner, and then all of a sudden the flow settles in. And sometimes you don't even get a pullback. You just get some chop, some quiet, right? Where the market's dead, and then maybe a band of sweeper activity comes in, and then you get to trip up. But it's amazing that, how the flow a lot of times lines up with these Niners. It really is. On an intraday time frame. But yeah, if you trade intraday, you should at least know where these things are at. You should. Again, you don't have to trade off them. I don't trade off them unless there's flow behind them, but you should at least have them on your screen. There's no reason not to. You're all called Tim LaBelle, so I don't even know who's asking the question. But what platform do you use? Whoever said new here. Oh, Thinkorswim? The person who's asking about where could they, okay, it's called Sequence Counter on Thinkorswim. Sequence, SEQ, Counter. That's what it's labeled on Thinkorswim. Just a different name. Yeah, on TradingView, it's easy. Like it's all a preference thing on TradingView. You go to indicators here, right? And you could type in Tom DeMark. See? Oop, just put here. I put the word Tom in. Tom DeMark sequential. Right? Maybe you just want Niners and nothing else. Tom DeMark count indicator. Oh, John, I see your name now. Unbelievable. Sometimes I see your names. John, you could go on there on a weekend and just have fun looking at which one you like better. Maybe you don't want it as noisy. Maybe you like the colors. Just take a Saturday while you're in lockdown mode and fool around, and there's so many of them. But yeah, I would, again, you guys know, I would definitely have them on my screen. They do more good than harm, without a doubt. Yeah, the stuff, the changing bar stuff, you got to play with the settings. But you could get all that. Like when you go into those things, you play with the settings and you can change the bar color to whatever you want for signals. I got oh, this one doesn't have it. Like I said, the best thing for you guys, go on there and take a look, play around with them. That's the best thing, like they have where you could the different time frames, right? So you see them all on one time frame here. 1 minute, 15-minute daily, the zones. They got so much. You lose your mind with all this shit, but yeah, the colors are nice. I need to see them because sometimes I need the reminders, I need the blatant reminders of things. So that's why, as it gets close to a Niner, it'll light up purple here. So go to the Steam room. I found Tim LaBelle. I got to see this. Let me see. Who's Tim LaBelle? This is Tim LaBelle? That's what's the name? Oh, unbelievable. Who? I see names switching now from Tim LaBelle to your actual names. Now I see X Trader. What's up, X Trader? I see John. I see Hawley. Oh, there they go. They flip back to Tim LaBelle. Zitch. I see Zitch. Ed. I don't see you, Ed. It says Tim LaBelle. Patty LaBelle. I don't know what that is. We got to figure that out. Yeah, that was I just saw it the other day. It was on Classic. What about Bob? The other day I saw it. Hysterical, that movie. Is a great movie. All right, guys. Anybody who's out there who's new, Tim LaBelle, go to wallstreetjesus.com if you're looking for any more information on everything we spoke about. There's also trial information and all that stuff. All right. And for those of you who are members, keep an eye out. Update the sentiment tonight. We should be closer than where we were coming into today. Put it that way. So at least we could keep our eyes open for a little more tomorrow. All right. Enjoy the night, guys. Stay safe.